All right, all right. Let's keep this going. We're flying through here today, man. We are flying through here today. We're already on our third segment. All right, already here on our third segment, okay, which is going to be consumer finance news and more industry trends. Okay, more industry trends. I just feel like there's not a lot of people talking about the trends, in the financial industry. So we're going to talk about a little bit of that right now. So the main one I want to talk about is just fintech's role in modern lending. Okay, modern modern lending. So um, the emergence of fintech and lending. So fintech stands fintech stands for financial technology, right? So you probably seen a lot of these companies, but you didn't even know that they were technically fintech, right? So a lot of these banks that are popping up, right, that are just online only. A large one is Blue Vine, right? Blue Vine's is a super large bank, okay, super large bank, and they're mainly for businesses, but Blue Vine's like a financial tech. So fintech has grown tremendously over the last couple of years. Okay, grown tremendously over the last couple of years. So how financial technology companies are transforming traditional lending? They're transforming it because it gives people the opportunity, to get a bank account, right? Something like Chime. Okay, people that may have a little bit of trouble with a bank in the past, like a bank like Chime, Blue Vine, or something like that, they can offer you, a bank account, right? So just because you messed up in the past doesn't mean that you're unable to get the help you need, right? That doesn't mean that you shouldn't have an account to store your money, to save, to get a credit card here and there, right? So these fintech banks have really, really been blossoming. So the shift toward digital platforms offering personal loans, mortgages, and other credit products. So it just gives people the chance, instead of going into an actual bank to get a credit card, you can use one of these fintech banks to get a credit card, and it's the same thing. Now, I will say a lot of the fintech banks are actually backed by brick and mortar banks. Okay, so that's why sometimes it'll say a blue vine on the front, right? But Blue Vine is kind of like a DBA of the actual brick and mortar company. You know what I'm saying? So I think that's a really, really smart move. Really, really smart move by these bigger banks or even smaller banks to partner up with a fintech app or a fintech company that provides these services, so they can just provide the lending, the credit cards, stuff like that, and let the company be the face of it. But they're still earning their interest, they're earning their money on the back end. All right. So benefits to consumers: it's increased accessibility to credit for underdeserved populations. That's kind of what I just went over. Streamlined application process and faster approval time. So this is a huge one. What they have done, they've kind of transformed this. So people don't really remember. It wasn't too long ago where, if you wanted like a loan over 50K, 100K, you had to go into the branch, right, and fill out an application. Okay. So what these fintech companies have done a really good job is they've streamlined the process, right? Streamline the process, made it super user friendly, super easy. Big letters here, click here, do this, really streamline. And, with our Apple products, with our Google products, all the information can sometimes just get imported onto the application where we don't even have to do anything, right? We just click, click email, and our email pops in there. Click password, our password pops in there. So that's another thing that they've really improved over the years, is the accessibility and just the making it a lot more user friendly for pretty much for everyone. All right. So challenges and considerations. Now, the regulatory hurdles, okay, and the need to update policies to oversee fintech operations. I use a lot of fintech companies. All right. One of the downfalls is you gotta check your emails at all time because they're updating their terms and conditions like every 60 days. Okay, so that's another thing. So the FTC might make a rule. So then they got to change their terms and conditions, send you over the application. You got to re-sign it, or they just have to show it to you. So, in the future, if something happens, you can't just say, hey, I didn't know about this. They can say, well, we sent you 5 emails in 2024 about these things. Okay. So that's just one of the, one of the little downfalls that they are constantly updating their contracts, updating their terms and conditions. Okay. Another kind of challenge that I see is ensuring data security and privacy for consumers. I can't stress, I think next week, let me write that down. I think next week we're going to go over data security and privacy for consumers. We're going to have to go over that, I think, next week. But that's a huge topic. Okay. That's a huge, huge, huge topic is privacy and data security. Right. And that's also why that's one of the largest growing industries now is data security, computer security, because data is super super important and privacy is super super important. And what I will say about the data stuff, if if an app is free, all right, you're the product. Let me say that again. That might have went over. Don't let that go over your head, y'all. If the product is free, okay, you're the product. All right. Meaning, let's take what's a free app? Credit Karma. All right. Credit Karma is probably the most popular credit monitoring app there is. Credit Karma is free, right? Meaning you're the product, meaning your data is the product. Okay. It should be well known what these companies do with our data. They sell it. Okay. They sell it. That's why you're able to log into an app. Okay. And then there's products shown to you based on your data, right? That's why you start getting emails. Okay. Like you're thinking about a credit card, you're thinking about a Capital One credit card. Next thing you know, you get 3 Capital One emails, you get 4 Capital One apps, you log into your Credit Karma and you get 3 offers from Capital One. So it's all coincide, it all kind of works together. All right. So yeah, I definitely have to do a whole segment on data security and privacy for consumers. Definitely have to do that. All right. So let's go into our next segment here. All right. Our next segment here. I kind of did this a little bit last week, but me being a credit specialist, we always have to throw some credit topics in there. But I had a lot of questions after the show. A lot of DMs. Thank you guys for reaching out about the topics and how I can help and what other things I should talk about. But I had about 8 DMs that wanted me to break down the credit scores again. Okay, so understanding your credit scores, explanation of components that make up your credit score. All right, meaning when I talk about your credit profile, this is what I'm talking about. Okay, when I'm talking about your credit profile, this is what I'm talking about. Right, number 1, payment history, 35% or 92.5 points. Okay, 92.5 points. And another thing another thing I found out. All right, I got a couple of mentors that I've been working with the last couple of years. One being Derek Harper. Shout out to him. He's one of the ones that helped me get into credit. But I guess before a couple of years ago, I think like 2015 or something. I don't even know, but I guess how the points are broken down now, how I said payment history is 35% or 92.5 points. I guess the points part of that is very, very new. And I guess Derek Harper is one of the ones who started doing that. It's an easy calculation. You just do the 35% of 550 points is 192.5. Right. It seems like common sense, but I guess people weren't breaking it down like that. So I guess you learn something new every day, right? So number 1, payment history, 35% or 192.5 points. That's why late payments hurt us so bad, is because it's the largest category that make up our credit profile. Number 2, credit utilization, that's 30% or 165 points. Credit utilization is one that you are in full control of. Okay. We probably see 100 to 500 credit reports per week with my company, King Credit Services. And 60 to 70% of them, they all have utilization, 50% or higher, which I really do not understand, right? That's the main one that's in your control. You can control how much credit you're spending, right? How much credit you're using on your cards, right? That's all us. Okay. Number three, length of credit history. All right, that's 15% or 82 and a half points. All right, length of credit history is very difficult to build. That's just your credit age. Okay, so that's another category that I see that my younger clients and my younger viewers have a lot of trouble with because they're like, "Hey, I'm only 22. How am I supposed to have 10 years of credit age when I just started 4 years ago?" So ways to combat that is you can add, products like Rent Reporters, okay, or Rental Karma. All right. These companies are great because they allow you to report your rent even if you're not on the lease. Okay. Even if you're not on the lease, you can put your landlord or your mom or your aunt or whoever you're living with, okay, whoever is on the lease that you're paying money to, you can put them as the reference or point of contact. The companies will reach out to them just to verify that you actually live there, verify how long you live there, and verify how much you actually pay per month for rent. And then 30 days later, that rent will start getting reported onto your credit report. We've seen people's credit reports jump from the low 600s to, man, almost mid 700s, right? Almost mid 700s because a combination of them, but that's like 82 and a half points. So if you go from, 1 month and you jump up to 6, 7, 8 years, right? That's going to just blow your score out the roof. Okay. So credit history is a major, major, major category. Number 4, credit mix. All right. Number 4, credit mix. That's just 10%. Okay. Credit mix just means what type of accounts you have. Okay. There's only a couple accounts that you can even have, right? Falls into installment loans or revolving accounts. Okay. Installment loans are any type of loan. We kind of talked about one earlier, that pledge loan, which is a secured loan. So unsecured loans, mortgage loans, auto loans, student loans, those all fall under installment loans. And then the other one is revolving credit. That's just your secured cards or your unsecured cards. But that can also be, credit builders and credit starters like, what's a good one? Kickoff, right? Kickoff or the extra card, right? These cards, these accounts are really good because they report as revolving credit, okay, but they're not actual credit cards, right? You're still getting all the benefits of them, right? So that's really good. And if you guys need easy accounts or anything like that, you can always just text the word starter, okay? Text the word starter, STARTER, text the word starter to 844-689-0199, and you'll get a quick little message. It's just a link to a Google Doc. Okay, that Google Doc has some easy accounts on the first page, and then the second page has the steps. Okay, so it's super easy. A lot of my young viewers love it. That's who I made it for. So if you're just getting into credit, you can text the word starter to 844-689-0199. Okay, and you'll be able to get some of those accounts. A lot of those accounts too, you can get them with no hard inquiries. Okay, like the first 5, you can get your Kovo, your Kickoff, your Credit Strong, your Rent Reporters, and there's another account on there too that you can get with no hard inquiries. Right? Somebody said, Jazzy on TikTok said, I'm using Kickoff right now. Yes, Kickoff is a really big one, and Kickoff. If you're listening, I'm waiting for my check too, man. You guys reached out. Kickoff, I'm waiting for my check. Let's go. Number 5. All right. New credit inquiries. That's another 10% or 55 points. That's just, your inquiries. And remember, we went over this last week. Inquiry means a company's inquiring about you. They want to know about you. So when they do a hard pull, okay, you get a hard inquiry. All right. There's also soft inquiries. Okay. Those don't really hurt you, but they're still there in the background. Okay, they're still there in the background. All right, let's go into our last and final segment. All right, going to our last and final segment. That is our money myth buster. Okay. This one is about utilization. Okay. This one's about utilization. That whole 30% utilization myth. Okay. It doesn't make sense. Okay. It doesn't make sense. Okay. Why would you 30%? Okay, let's do some simple math. All right. 100% minus 30% is 70. Okay. So that means, remember in high school and stuff like that, a 70, when I was in school, a 70 is a C minus, right? That's not that good, you guys, right? So we need to get that utilization below that. And I can't prove this. I can't prove it, but I really think that the credit card companies years ago somehow got in cahoots with Experian and all these other companies to just straight up lie to us, right? That's why I'm giving this that money myth buster, because 30% just doesn't make sense. It's too high. Yeah, 30. Like some companies will deny you if your utilization is at 30%. So it's just ridiculous, right? In reality, okay, the optimal credit scores, you need to be between 1% and 9%. All right. I like to say just single digits, but 1% and 9%. All right. Once you get your score right there, down to that 1% and 9%, all right, you're going to be a lot more lendable. Okay. Your score is going to naturally increase over the months just from being responsible. All right. Just from being responsible. Okay. Now, strategies to achieve a lower utilization, just regularly paying off your balances before the statement date. All right. Now, a little trick that I started doing a couple years ago that's really, really helped me is you can call your credit card company. You can change your payment date. Okay. Your payment date is when your minimum payment is due. You can change your payment date to 3 days before your statement date. All right. Your statement date is when your statement date or closing date, whichever one you want to call it, they're interchangeable. You want to change your payment date to 3 days before your statement date. I then just put it on auto pay. All right. Just put it on auto pay. What this is going to do is it's going to eliminate any possibility of any late fees, late payments, and it's going to eliminate the possibility of you having high utilization because you're paying your whole balance off before the statement date. So once you do that and it reports, it's going to report a super low balance or zero. Okay. I rather you report a 0% balance, 0% utilization than a 30% utilization. Right. But for ideally, we want it between 1% and 9%. Okay. You can also request credit limit increases. You want to do that every 4 to 6 months on each card. Just be responsible with just have to be responsible when you're doing that. And right, distributing expenses across multiple cards to keep individual utilization low. Right, that just means that don't max out the number one card that you use all the time. All right, don't max out your number one card that you use all the time. You can spread that out. All right, if you want to just put like a little Netflix on one card, a little Hulu on one card, and just put it on auto pay just so the cards are actually active and used, you can go ahead and do that. All right, so a couple key takeaways: just understanding buy now, pay later services. Benefits include immediate access to products, interest-free installments, flexible payments, and increased purchasing power. We did a little news about the CFPB, and we talked a little bit about credit cards and delinquencies. All right, so again, thank you guys for tuning in. This is my new show, Financial Freedom Hour. We're here every Saturday, 1 to 2 p.m., right here at The Answer. If you guys need any more assistance, you can reach out on social media, all platforms at King Credit Services. We're here to help. And if you have any credit struggles or anything like that, schedule a free consultation with my team, okay, with my company. Even if you don't sign up, come on, learn something. Let us look at your credit report, and we'll go from there. Again, thank you guys for tuning in to the Financial Freedom Hour. I'm Louis Bland III, and I will see you guys next week.